Indian stock market witnessed their worst single day fall in over a month on Friday, wiping out nearly 5 lakh crore of investors' wealth. Benchmark indices Nifty and Sensex are now on a 3-day losing streak and are down over 1.5% for the week. The correction comes just ahead of US non-farm payrolls report, which is due later today, which will give key insights into the strength of the labor market in the country. There are concerns that if the data continues to remain weak, it may lead to a technical recession in the US. To help us decode if the fears of a recession in the US are justified and if it does occur, how will it impact India? We are joined by Gaurang Shah, Senior Vice President at Geojit Financial Services. Gaurang, first of all, thank you for giving us time here on News 9. I want to begin by asking that one of the key reasons for today's correction is a growing nervousness around the upcoming US jobs data, which is again due later today. Now, recent comments from US Fed Chair Jerome Powell, they suggest that the Fed's focus might be shifting from inflation to weakening labor market. If that's the case, should we expect a significant rate cut in the September policy meet, perhaps over 50% that the market has already factored in?
So, Suresh, I think what the US Fed Chair has constantly maintained is that whatever be the time frame and whatever be the quantum of rate cut will totally depend upon it will be data dependent. And I think it is possibly in pure wisdom that the shift is going to happen. As much as you have to take care of inflation, I think it is equally important to take care of unemployment numbers in case if that is going up, and do whatever necessary in their wisdom in terms of curtailing that to a reasonable level. 25 basis point, 50 basis point, that's what the general expectation is on the street. And like you mentioned, 50 basis point is already factored into the market. And more importantly, these steps are very important in terms of your futuristic outlook and growth. You cannot undercut it, you cannot overshoot it. So you have to have a balanced approach to this. If you undercut it, then the necessary changes that you want to get into effect will not come through. If you overshoot it, then you will realize in the near future that what you did was whether it was right on the wisdom or whether it was wrong. So I think leaving up to the wisdom of the Fed chair, the quantum will come through. But just in case if it is 0.25 to 0.50, then I think the market will take it in stride. If it is something more than that, then we'll have to wait and watch, honestly speaking, because that is something that nobody is up till now, at least for our part, we are not expecting that. So let's wait and watch. And I think this is not the end. If need be, they can take further steps as we go into the future. So let's take a calculative approach towards this.
All right. So it sounds like rate cuts are coming. We just don't know what the quantum of the rate cuts is going to be. But we also have RBI policy meet next month. Do you expect RBI to take cue from the US Federal Reserve, or do you foresee them taking their own path to monetary easing?
Now, this is not like copy paste, Suresh. I think the geographies and the demographics and the data points are very different when we have to compare US and us. And aping or replicating or copy pasting what the most developed economy in the world is doing will not be a right approach. For us also, I think the way it is equally important for any country or any chair of a central bank to take a decision, equally important it is for us also. And remember one thing, we are, in terms of demography and the diversity we have, it is going to be something that will possibly happen. I don't know, honestly. I mean, our view at Geojit is that possibly by end of year 2024, December 2024, we might see a small rate cut from the Reserve Bank of India, depending upon what is guided by the Monetary Policy Committee. I don't think it will be aping what US does. They will do according to what is right for them, and we will do according to what is right for us.
Do you think that the fears of recession in the US are justified? And if it does occur, how will it impact India, considering that they are our second largest trading partner?
So, I mean, it's really funny for me to look at this flip-flop. I think 3 or 4 weeks back, we had a Monday meltdown, if you remember. That was because of recession in US. I personally feel that there was some agenda behind it, because to possibly corner the Fed chair to make an announcement in terms of rate cut. So at Jackson Hole meet, the Fed chair has mentioned that September will be the month. Date and quantum is not known to us. Be the wisdom of the Fed chair. And once again, we are facing this. I mean, how can a developed country like US come out of recession in 3 weeks and go back into a recession after 2 weeks? I mean, that is what I fail to understand, Yash. And there has been no concern from the Fed chair or government authoritative or representatives as far as this news is concerned. So I don't know where this news is coming from. To be very honest, there is no basis as far as I tried to figure it out, but I found no basis for whatsoever in terms of authentication of that recession news that is coming from US. So I think, I mean, I still find it very, very weird and funny that this flip flop is happening as far as US is. So let's hope they don't go into it. And up till now, there are no indications, to be honest, known from the reliable source.
Gaurang, the market, they are now on a 3-day scale. Do you see this correction as a blip, considering that the jobs data in the US is due to release, which is adding to the nervousness? Or do you think that perhaps right now, considering that the markets are in fact slightly overheated, it would be prudent for investors to sit out and wait for a clearer picture to emerge before taking a decision?
Before our interaction, I was just glancing at the Nifty chart and I was looking at last 1 month chart of the Nifty. We were at 24,000, yes, on 6th or 7th of August. From there, we have seen 25,300. You can very well know 1,300 points journey. And last 2 weeks, we had a continuous rally on the street. Nobody questioned. Today, we are seeing a downtick of close to about 1%, just about 1% on Sensex and Nifty, yes. And my humble submission is that if you don't have the capability or capacity to digest this 1%, 4%, 5%, or even more, then I think you should rethink your strategy in terms of coming to the equity market. Like we always say, yes, equity market is exposed to all kind of risk. If you are able to digest that, then you are welcome to the stock market, because this is one asset class which has created wealth over a longer period of time. But to say that you need to have a consistent upside is something that I cannot fathom. So this is a healthy correction. I'm glad that we are seeing this, and possibly we'll found a base near about these levels where we are somewhere close to about 24,850. I think we are very close to that bottom. And possibly we will possibly spend some time over here before venturing on beyond 25,300. So it is good, it is healthy, it is an opportunity for all those people who are waiting for a correction to come and invest in the stock market.